What an incredible day for the markets. Few could have predicted the sheer scale of excitement and surprise that unfolded. 180 Life Sciences Corp., ticker symbol ATNF, shocked everyone on August 12, 2025, with a move that instantly became the talk of Wall Street. Its stock price didn't just rise, it skyrocketed, soaring an astonishing 182% in a single trading session and closing at $9.49 per share. For many investors, it was a once-in-a-lifetime rally. This explosive move was triggered by a major SEC filing that sent shockwaves through the financial community, sparking intense speculation and analysis. Billionaire Peter Thiel, acting through Founders Fund Growth Management, had acquired a significant 7.5% stake in the company, making headlines across the globe. Thiel's involvement sent a powerful signal to the market. When a legendary investor bets big, everyone sits up and takes notice. His reputation for spotting disruptive opportunities is unmatched. This is what's known as the Thiel effect. When smart money moves, the rest of the market often rushes to follow, hoping to ride the wave of innovation and profit. Investors believe Thiel sees potential others missed, fueling a buying frenzy and driving volumes to new highs as excitement spread like wildfire. But what exactly drew Thiel in? The answer lies in a radical transformation that few saw coming. 180 Life Sciences has pivoted from its roots in biotech to become a major holder of Ethereum, embracing the world of digital assets. This bold strategic shift is at the very heart of the story, and it's the reason why Thiel, always on the lookout for the next big thing, is now involved. We're witnessing a bold blend of traditional finance and the new world of crypto, a moment that could redefine how investors think about the future of both industries. To truly understand the impact of recent headlines, we need to talk about Peter Thiel, a name that's become synonymous with bold innovation and calculated risk in the tech world. Thiel co-founded PayPal, revolutionizing online payments, and was a core member of the legendary PayPal Mafia, a group of entrepreneurs who went on to shape the very fabric of Silicon Valley. He made history as the first outside investor in Facebook, turning a $500,000 bet into billions and helping launch the social media giant that changed how the world connects. Through his venture capital firm, Founders Fund, Thiel has backed game-changers like SpaceX, Airbnb, and Palantir, companies that have redefined industries and pushed the boundaries of what's possible. Thiel's investments aren't just financial, they're powerful endorsements of disruptive potential, often signaling which startups could become tomorrow's giants. He's also a vocal advocate for cryptocurrency, believing that Bitcoin and Ethereum are more than just digital assets. They're the building blocks for a decentralized financial future. Thiel doesn't just talk about crypto. He puts his money where his mouth is, investing heavily in blockchain technology and companies driving the crypto revolution. So when Thiel backs a company pivoting to hold Ethereum, it's not just news. It's a massive signal to the entire market that something big could be on the horizon. This move perfectly combines his expertise in tech disruption with his deep conviction in the future of crypto, making it a strategic play that gets everyone's attention. It's not a random decision. It's a calculated step that aligns with Thiel's long-term vision for the evolution of global finance and technology. Thiel's involvement sends a clear message to investors and innovators alike. This Ethereum-focused strategy is something the world should be watching closely. That's why ATNF's stock didn't just rise. It exploded as the market recognized the power of Thiel's vision and the potential of this bold new direction. What made Thiel take notice? A total reinvention. 180 Life Sciences was a biotech firm chasing new treatments for inflammatory diseases, a tough, uncertain path. But leadership made a dramatic pivot. They're now a digital asset treasury, focused on acquiring and holding Ethereum. The company even rebranded as ETHZilla Corporation, signaling its new mission. To fund this, they raised $156 million via convertible notes and $425 million through private placement. This war chest let them aggressively buy ETH. The shift was inspired by the success of other crypto-focused companies. Incoming chairman McAndrew Rudisil led the charge. Now, instead of betting on a single drug, the company is betting on the future of Ethereum. This clear, bold narrative is what attracted Thiel and other investors. It's a complete transformation, from biotech to crypto powerhouse. Let's look at the numbers. ETHZilla now holds 82,186 ETH, a massive stash for any company. Their average purchase price, $3,806.71 per ETH, totaling about $349 million invested. They also have $238 million in cash, giving them flexibility for operations or more ETH buys. For investors, atnf stock is now a proxy for Ethereum, accessible through a regular brokerage account. The company's value is directly tied to ETH's price. If ETH rises, so does the company's value and stock price. Thiel's investment wasn't just about a small company. It was an endorsement of a new corporate model. Ethereum is betting that holding Ethereum will outperform its old biotech business. This simple, powerful story is easy for investors to grasp. It's a bold statement about the future of corporate treasuries, and it's generating real excitement in tech and crypto circles. Ethereum isn't the first to try this playbook. MicroStrategy, led by Michael Saylor, pioneered the strategy by converting cash reserves into Bitcoin. Their massive BTC bet paid off, turning the company into a Bitcoin proxy and sending its stock soaring. Now, Ethereum and others are applying this model to Ethereum. They see ETH as digital oil, fuel for the next internet era. As Ethereum's ecosystem grows, these companies expect ETH's value to surge. The strategy is simple. Hold crypto, let the asset appreciate, and offer investors transparent value. Ethereum and Bitmine immersion technologies are leading this new wave. They're betting Ethereum is the next big frontier in crypto. It's a proven model, now adapted for the Ethereum era. How do companies fund these massive crypto buys? They use tools like convertible debt, loans that can turn into stock if the price rises. This gives companies cash at lower interest rates and gives lenders upside potential. Ethereum raised $156 million this way for its ETH purchases. They also used private placements, selling shares directly to select investors for another $425 million. These methods let companies act fast and buy crypto before prices run away. Debt and equity financing are core to this aggressive strategy. The goal? Accumulate as much crypto as possible as quickly as possible. The bet future crypto gains will outweigh the costs of debt or dilution. It's a high-stakes, high-reward approach. The rewards of a crypto treasury can be massive, but the risks are just as significant, if not greater. Managing a treasury built on volatile assets like cryptocurrency is a high-wire act, where fortunes can be made or lost in a matter of days. Ethereum's entire business model is tightly chained to the price of Ethereum. Every move in ETH's value directly impacts the company's balance sheet, making it uniquely sensitive to crypto market swings. If Ethereum's price crashes, Ethereum's value and its stock could plunge even harder, especially since the company uses leverage to amplify its exposure. Losses can snowball quickly in a downturn. Debt adds another layer of risk. If the stock underperforms, lenders won't accept shares as repayment. They want their money back, regardless of market conditions. This can put the company in a tight spot. If cash reserves run low, Ethereum could be forced to sell Ethereum at a loss to cover obligations, which can trigger a downward spiral and further erode investor confidence. To manage these risks, leadership claims they're being cautious, maintaining a $238 million cash buffer to avoid over-leveraging and to weather market storms. This prudent, risk-aware approach may have helped attract high-profile investors like Peter Thiel, who look for both upside and responsible management. Still, investing in Ethereum is essentially making a leveraged bet on Ethereum's future. The company's performance is magnified by both the crypto's price and its own financial strategies. If you're bullish on ETH, this stock can amplify your upside potential, but it also multiplies your risk, making the ride much wilder than simply holding Ethereum itself. The potential for big gains is real, but so are the chances of steep losses. Volatility is the name of the game, and fortunes can change overnight. Investors must fully understand this dynamic before getting involved. It's not just about chasing returns, it's about knowing the risks you're taking on. Make sure this kind of investment fits your personal risk tolerance and financial goals before jumping in. High reward, high risk. Know exactly what you're betting on and be prepared for the ride. Thiel's move and Ethereum's pivot come at a time of Ethereum strength. As of August 13, 2025, ETH trades at $4,616, up 7% in 24 hours, 56% in a month, and more than doubled in 3 months. This rally is fueled by positive catalysts, new U.S. legislation, Circle's successful IPO, and growing institutional interest. These events boost confidence and drive the market higher. Analysts are bullish, with some predicting ETH could hit $5,000 soon, or even $15,000 by year's end. Ethereum's market cap now stands at $557 billion, second only to Bitcoin. But caution is still warranted. Even with all the optimism, some analysts, like the Motley Fool, aren't putting ETH in their top picks. Crypto markets are volatile. Prices can swing fast. Investors should balance excitement with realism. Big potential, but always be prepared for pullbacks. What can investors learn from this story? First, influential investors like Thiel can ignite massive moves, but it's crucial to understand their reasoning. Thiel's investment is a strong endorsement of the corporate crypto treasury model, especially for Ethereum. Companies like Ethereum are making crypto exposure easier for traditional investors. This trend could bring a wave of new capital into crypto markets. But don't just chase hype, do your own research. Understand the company's strategy, financial health, and risk profile. Make sure you're comfortable with crypto volatility and leverage. Thiel's move validates a bold new strategy and spotlights Ethereum's potential. The lines between tech, finance, and crypto are blurring. The real lesson: analyze the trends, weigh the risks, and make informed decisions that fit your goals. Don't just follow the headlines. Understand the story behind them.